Well, Adani Enterprises is doing what it normally does, which is all of a sudden just wake up and have that big vertical move. Just pull out that chart of Adani Enterprises. There it is, 3108 is what you have on that.
Nifty region. One of these days. One of these days.
It should happen. It should happen by the end of this this month. So now, how much of it is in the price? Because it's been such a massive outperformer. But it now looks a matter of when and not if it gets included in the Nifty, because it fulfills all the criteria, and of course, Shree Cement perhaps makes way for Adani Enterprises. We have Sandeep Shah joining us now, managing partner at Motilal Oswal Private Wealth Management. Sandeep, hi, good afternoon. So much happening in the market. Are you bullish or bearish?
Well, I haven't changed my stance for a while now. I've been maintaining that what we saw was a bull market correction. And even I think a month back when I had come, the market had corrected about 15–18%. I maintained this is a bull market correction. And therefore, I'm quite happy to see that the markets have bounced back. Of course, it's going to be a jagged line. It's never going to be a straight line. But I think this ongoing dip, if any, should be used to accumulate. Of course, valuations have crept back up, but they're still reasonable. We're still at about 100% market cap to GDP. Perhaps on trailing price earnings to price to book ratio, we're probably 10% above the long-term averages. But I think that given the fact that we are likely to see that the impact of lower commodity prices coming in the second half and impacting earnings positively, and given that a lot of the data that we see around us, the high frequency indicators are suggesting that the economic recovery remains quite strong. Of course, there are some global headwinds that we have to contend with. But in this context, I remain quite positive. Do not recommend buying 100% at these levels, but continue to recommend to stagger over the next 3 to 6 months. One could invest 50% even now. And the balance 50% could be over the next 3 months.
Okay. So basically, correction in an ongoing bull market, that view sort of Sandeep is holding on to, and he believes that's how it's going to play out. 17,581 for now, I mean, is absolutely flat. Sandeep, any thoughts on what's happening with these banks, smaller banks like RBL?
In context, we've had a very anemic or little or no credit growth for a while now. And obviously now that credit growth is now close to 14–15%, I think the environment, the risk appetite of investors towards some of the smaller banks tends to increase. And I think to the extent that, some of these banks, seem to have developed good technology and good products. But I think the issue was really on the credit underwriting and risk management. And to that extent, I think RBI has made a lot of moves in that direction. And to the extent that investors are comfortable with the credit quality of the book going forward, I think some of these banks have a brand and they have a franchise and they have technology, they have good products. And if they can demonstrate to the market convincingly, then I think there are investors who are going to be willing to look at some of these smaller banks.
All right. Got that, Sandeep. Sandeep, what about, you have mentioned that you could be interested in some of those good quality PSUs. What could qualify as these? I mean, if you could give us a couple of names or sectors that these PSUs work in.
Well, I've been saying that for, I think, almost a little more than a year on your channel as well. And I think that there still remains some good quality PSUs in the power space, with some earnings growth with a reasonable dividend yield. You could selectively look at defense as well, because I think the growth on the defense side is just humongous. And I think that's, if the last decade was one of globalization, and clearly this decade is going to be of onshoring or self-localizing. And to that extent, defense being such a key important for any country, I think, and the government emphasis on defense, some of these PSUs have a huge head start on the defense side. And I think some of those also one could look at.
Okay, so PSU is something that one could look at. Sandeep, what about some of these oil marketing companies? They have been completely forgotten. Since you're talking about the PSUs, in particular, names like HP and BP, do they deserve sort of a relook?
Well, frankly, I think it's a place where few investors want to tread, because wherever there is indications of government regulation, especially which could hurt them adversely, I think the valuations are always going to suffer. And then there can be points of time when it appears that government regulation is not against these, or government intervention is not against the profitability of these companies, but that could again change on a dime. And given the fact that geopolitical tensions haven't really gone away, and the concerns and the war in Ukraine continues, and saber rattling continues elsewhere in the world, in this context, it's going to take extremely distressed valuations for investors to want to tread there. So I'm not saying there isn't value, but I think it's really more for opportunistic investors who can time their entry and exit, and perhaps not really for the faint-hearted or for longer-term investors, because things could stay like this for a long time, or they could again turn back. So that's what I would recommend.
Okay. By the way, I just wanted to ask you, on that banks question, you said there will be investors willing to bet given the credit growth, etc. Would you be willing to bet on any of these names, Sandeep?
Okay. Frankly, I'll put it this way: that there is a hypothesis in place where, the biggest concern, I'll tell you what are the two major concerns actually for the smaller banks, right? The large banks, especially the private sector, I think the case is open and shut, right? You don't need, we all know what the case is. But I think in the smaller banks, I think there are two things you want to be really careful about. One is, like I mentioned, about their ability to, on the credit underwriting side, and the comfort that you have there. And the second is also their ability to invest in technology. Because what is happening is that technology is actually becoming a differentiator. We've seen that one of the large private sector banks has suddenly gained significantly at the cost of the largest private sector bank in terms of valuations. And the only reason for that happening, it has actually been the perception about technology. Both the banks have great products, and arguably the largest private sector bank has probably the best credit underwriting. So if you're comfortable with that, but you need to actually get into deep in the credit book. I think that's the point for the smaller banks. If you can go into deep, wade in deep, look at the sectoral exposures, look at their credit exposures in terms of and also what is the allocation to sectors, allocation to borrowers. I think if you have a comfort on that side, or if you think that RBI has done enough, or some other private equity fund has done enough about this, then I think it's probably safe to go there.
Sandeep, we'll thank you on that note today. Thanks a lot for joining us. RBL Bank, by the way, even hit 20% freeze and now just cooled off a bit after that. Just one massive move which is on in the stock right now. The bank nifty as well, by the way, is picking some pace now. It's once again back about 38,900, making a move towards 38,940. 39,000 is where it's facing some kind of resistance. That's also where the 10-day exponential moving average is placed. So maybe there would be some bit of resistance around that. Let's do one thing. Let's take a break. Once we come back, we'll get you a check on the dealing rooms in D Street Chatter. And of course, Mitesh will be back with us for BTST calls.